Well, hello everybody out there and welcome. My name is Joe Jensen. I'm with Maverick Trading. I decided to throw a video together on online trading in general and some of the hidden costs that some of the newer traders aren't expecting. Things to look out for, especially if you're getting into trading online for the first time. The first thing I want to mention is there are unavoidable costs, period. Trading does cost money. There's going to be fees and commission structures of some sort, no matter where you trade and no matter what you're trading. If you are using a margin account, you will be charged margin interest based on the size of the amount of margin that you're holding and the time period you hold it for. Outside of that, there's other things that we can look for to maybe cut down some costs depending on the style or the trading that we want to do.
Attention! This video is for informational purposes only. Maverick Trading is a US-based prop firm that specializes in option and equity trading. If you want to become a professional trader for a firm that backs you with capital, apply now.
Let's get down to a basic breakdown of what I'm going to touch on. Now, there's a lot out there, folks, but I just want to do a quick overview of kind of what to look for if this is new to you or something you're getting to for the first time. Commissions free. You've heard that before. There are stipulations and catches. We always say, hey, there's no such thing as free. There's ways that some of these firms can compensate when it comes to commission free by using a little bit of variance in the bid-ask spread. We'll also talk about that briefly. Special transactions, things like futures and options contracts, will incur extra fees. And then if you're going to get into the prop trading side of things, there's fees and restrictions with it. Prop trading is a great way to get out there and trade if you don't have capital, but it does come with a catch. So first off, folks, let's just get into the commission-free statement. So trades are most often restricted to market orders. Now, when you place a market order, you are susceptible to the current bid and ask. Stocks trade on basically an auction where there's a buyer and a seller. With volatility and excitement in earnings, these buyers and sellers can spread themselves pretty wide, creating a little bit of a gap. The broker can get in there and start to shave those small gains off the bid or the ask, cutting out the outsides and creating a little bit of a game inside. Now, although the trader does not pay commissions, the best transaction price might not be given as it'll go to the broker. So let's do a real quick overview on how the bid-ask works. The bid is the price that the buyer is willing to pay. Now, it's not going to be exactly next to what the seller is willing to sell. If you take a look at the ask price, the price the seller is willing to accept. Now, these could be spread by 2 or 3 pennies, 4 or 5 cents, but if the broker can use your market order to go buy it on the lower end and then go ahead and immediately sell it on to the higher end, they can keep that difference of whatever that spread is. Now, in the end game, you'll still have the position in the stock, but you might have paid 2, 3, 4, 5 cents more than you should have. This does not make too big of a difference if you are a longer term trader. You're buying 1, 2, 300 shares and you're going to hold it for months and months. So the commission structure is actually pretty decent. If you're not looking for that nickel or dime, you're looking for dollars and dollars as the stock grows down the road. However, if you're a high frequency trader and you're looking for scalping, I want to get in at the best price. I'm going to sit there for 2 or 3 days and see if I can't sell this thing for 10, 15 cents above where I bought it. Well, then understand that that free commission is not going to help since you're susceptible to the market price. Now, folks, I can't get any deeper than that without getting into another class. But in a nutshell, that's how this works. So I really don't want to say that it's a bad thing. It just depends on what you're looking for. Do you buy a couple of 100 shares here and there and like to hold them for months? Then free commission would make sense. If you're a trader that's high frequency and if you're trying to get that 15-cent difference, well, then this is not going to work for you. Special transactions costs. These are also mostly unavoidable. Buying international stocks can require a currency conversion. If you're trying to buy something that's on the FTSE and you got to convert your US dollars to the Great British Pound to purchase that stock, a lot of times you will get charged for that transaction fee. But don't be surprised if you incur some sort of a small charge or fee, or make sure that you look into it before you start to trade things that might be overseas or off the US markets. Options and futures contracts also, they're usually always based on a commission up to a certain amount of contracts. However, once you exceed that amount, you're charged an extra little bit for that extra contract. For example, the first 5 contracts might cost you $5. But then if you go from 5 to 6, that 6th contract is going to cost you 10 to 15 cents per. So the 6th is 15 cents, the 7th is 15 cents, so on and so forth. So there is a build on that amount. There can also be assignment fees. Remember, folks, options will convert, and if they're in the money, you will be delivered shares of stock, or you will be called out or put to, according to if you own or sold that contract. These can be added to the transaction cost, saying, okay, once we converted your option into shares, we had to charge you a conversion fee. Something else to look into. Prop trading is another thing that comes with a lot of questions. Maverick is a prop firm, and I get this a lot. I figured I'd throw it into the video. So desk fees, it's a monthly expense that carry on prices across firms based on any number of different variables. And these fees can vary. Capital amount approved to trade, access to services and support. A lot of firms will charge extra to talk to other traders or have support when it comes to their accounts. Profit splits and payout levels, percentages of profits. If you want to lower commission structures, they will incur an extra charge. Special trading permissions, stock and options and forex and crypto futures. As you start to trade more vehicles, you can incur more of a desk fee to have access to those feeds, to that data, and the margin that's incurred to trade those vehicles. Newer to prop trading is challenge fees. A lot of the upfront costs can be expensive for a lot of traders with no capital that want to get into this. Challenge fees are great. However, they do come with strings attached. It's an upfront fee that to prove success in a trading system for your capital, they're going to ask for a minimal amount of trades, and you're going to have to exceed a certain percentage in gains. Showing management systems. Now, this is a upfront cost, and once you're approved for that, then you'll have access to the capital. This can require up to 3 different phases, including higher fees if you wanted to apply for higher amounts of capital. $10,000 is going to be a lesser fee than if you're trying to apply to $100,000, and so on and so forth. There also are some caveats. Inactivity fees are something to look for, and minimum and maximum restrictions when it comes to trading activity. Just be mindful. However, this can be super lucrative to a very active style of trading. So in conclusion, folks, I didn't get too deep into it. I just want you to get a basic overview. Fees and costs are part of trading, but knowing what you need and what you don't need is important. It's an easy, quick way to cut down costs. Commission structures, loose transactions versus strict limits. Loose transactions meaning I'm okay having the free commissions if I pay an extra couple of pennies here and there or an extra nickel or dime if I'm doing something longer term. However, strict limits give you that nice solid I'm in at this point and I'm out at that point. Also, if you're going to be trading something like cryptocurrencies, futures, and options, just be mindful of contract fees or those special transaction fees that almost every firm carries. Capital needs is important. Prop trading is a great way to trade for those with little capital. Just be mindful of the fees, the structures, and restrictions that come with it. Choose one that fits your style. There's a ton out there, folks. There's forex trading, there's crypto trading. There is options trading. It just depends on your style and what you want. Each prop firm is very, very similar, but they will offer a little bit more or a little bit less, depending on who they are and how you're comparing them. And that moves me over to my plan. So start with a very detailed plan, breaking down the goals of what you want to achieve as a trader. Too often I get on the phone with a trader for the first time that says, I just want to make money. How do I trade? Well, it's not that simple. It's very specific to your style, your personality. Consider your capital availability along with your availability to trade. Are you someone that can do this every day? Do you have a lot of money? Do you have restricted amounts of money? Psychology is a big factor in trading and trading success. Identifying your trading personality and frequency first before you even open this door is a big part of it. It will put your best foot forward and also identify mistakes that you could possibly make before you even get started. Research. Find the best fit for your overall trading plan, capital availability, and time availability. Once you have that, then you can get out there and shop around. I always say it's trying to look for a car without knowing how many doors you want, how many seats you want, and how big you want it or small you want it. You're just going to go look for a car. Usually people have an idea of what they want. Hey, I need an SUV. I need 4 doors. I need a trunk. I need 4-wheel drive before they go. Well, this is no different. Understand, a lot of people think that they can go out and learn how to trade the best way that works. There's a lot of ways that work. It's important to find your best way, who you are, and go find what fits you. So shop around. Cost is unavoidable, but it can be managed based on your style, frequency of trading. You might not need access to some of those things like the forex and the futures or options. You could cut costs immediately by doing that. You might not need a prop firm. You might have enough capital to trade on your own. So you look for things with lower commission structures that can adhere to that. Another thing that I'll add is don't get cheap with yourself. Ease of use and comfort with a firm and their software, any software that you use, can be worth a little extra, and it always is. Being able to manage a position, balance a portfolio, it might cost you an extra couple of bucks here and there, but it's worth it in the long run if it creates consistency and comfort with you as a trader. So go out there, do what you can. I hope this helped because there's a lot more that goes into it than just this, but it's a good start. Thanks so much for joining me, folks. See you later.
Maverick Trading releases daily videos on market commentary and potential trades. Check out our latest